morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, November 20th. Prices are lower here across the board overnight in the ag space. The soybean market just continues to pull back here under the weight of growing production prospects in South America. Beans are down 7 to 8 cents, just a tick or two off their overnight lows. Meal's down about $1, while bean oil has fallen another 65 to 70 points. Corn prices down about 2. Wheat did back up another 3 to 5 cents. Speculative traders, they were modest sellers across the ag space yesterday, with the exception of wheat, where they were net buyers of a couple thousand contracts. Overall, speculative traders remain long just over 100,000 contracts in corn, about 70,000 contracts in bean oil, while net short pretty much everywhere else. Yesterday, ABARE, they raised their Brazilian production forecast to 167.7 million metric tons, while Dr. Michael Cornier raised his estimate 1 million metric tons to 166. Both are still just below the USDA forecast at 169 million metric tons. With forecasts remain non-threatening, I would look to see production forecasts continue to work their way higher. U.S. export commitments last week at just below 1.1 billion bushels represented about 60% of the USDA forecast, below the historical average of 63. So to me, pace analysis would suggest we're probably at least 50, maybe closer to 75 million bushels. Still too high with the USDA export forecast. And if that's the case, I think it would be a pretty tall order to keep spot beans near this $10 level. Meanwhile, the Trump administration ready to return to the Oval Office. We have a lot of unknown factors regarding biofuels and U.S.-Chinese relations hanging in the balance. Chinese customs data overnight did show they imported 541,000 tons of U.S. beans in the month of October. While that was double what they took from the U.S. In October of a year ago, it was still only a tenth of what they took from Brazil and less than half of what they imported from Argentina. In the first 10 months of the 2024 calendar year, China has imported 15.1 million metric tons of U.S. beans. That's down 13% on the year, while they imported nearly 68 million metric tons from Brazil, up 14%. Not much fresh news from the Black Sea region here overnight, as we continue to wait to see Moscow's reaction to the U.S. allowing Ukraine to use U.S. weapons to strike deeper within Russian territories. D's corn seems to be carving out a little bit of a tight trading range here between the November high 435 and moving average support below the market at 417.5. Ethanol production later today expected to remain near record levels. However, that despite the fact we've seen production margins pull back here as of late. Exports have turned quiet. However, we do remain competitively priced in the global marketplace. And without a more threatening weather forecast, it just seems like jam beans will once likely challenge its contract lows from August near that 975 level. However, weather problems here forward are certainly possible. Central areas of Argentina have turned dry as of late, which has enabled farmers to get in and make good progress planting their crop. However, it does make forecasts for rain next week all the more critical in order to keep production prospects high. Diesel oil did break down here overnight to a new low for the month, as speculative traders likely shedding some recently added length in the market. Moving average support rests at 43.56 with secondary support at 42.87. Diesel meal is hovering just above its contract low with major support near 280. Wheat prices pulling back overnight, but near the midpoint for the range for the week. As tensions remain high in the Black Sea, I would not expect to pull back to the recent contract lows despite improved conditions here in the U.S. Thank you for listening, everyone. I hope you have a great day.